Hey guys, this is the third session on the Unit 3 technical analysis. So basically we are talking about the technical indicators. There are literally hundred of technical indicators used to generate buy and sell signals. So we will look at just few that I use actually and that the average traders are using. The first is the relative strength index, that is the RSI, then the on balance value, and third one is the Bollinger Band. So first starts with the relative strength index, the RSI. Comparison between the days of a stock finishes up against the days it finishes down. Big tool with momentum trading ranges from 0 to 100. Stock consider overbought around the 70 level and stock consider oversold around 30 level. The shorter the number of days used to calculate the more volatile. So what are the numbers? So let me show you the charts first, so you will understand this RSI indicator in detail. So here you can see the pharma stock chart here. Okay, so you can see the time on the x-axis, the y-axis is the stock prices. Okay, so this is the RSI. The green line is the RSI, which is showing the price movement between the 30 to 80 level. So this is the around 37 level. So if this RSI is not visible on this chart, let me explain on the terminal. Okay, so this is a chart. So let me add here RSI. Okay, so I have added RSI. So you can see, let me change the level 70 30. 70 is considered as a overbought and 30 is considered as a oversold. So here you can see the level. So 30, it is near the 32. That means today's fall or maybe the next day's fall will consider as a overbought zone, and we will see the reversal in upcoming in reversal next week. Reversal in the Nifty Bank Nifty, reversal in the stocks, in reversal in particular stocks. Okay. Okay. So next is the on balance value. On balance value was developed by Joseph Granville, one of the most famous technicians of the 1960s and 1970s. On balance volume OBV is calculated by adding volume on up days and subtracting volume on down days. A running total is kept. So Greenwald believed that the volume leads prices. To use OBV, you generally look for the OBV to show a change in a trend or diverges from the price trend. If the stock is in uptrend but OBV turns down, that is a signal that the price trend to move soon reverse. Okay. So let me plot the volume chart on the part. So on this stock, on this option, you can see the volume chart. This is the volume. So on the green day, you will get the green value. On the red day, you will get the red value. So let me change first day. So today we will see the green value because the fall is happened in the stock, or fall is happened in the Bank Nifty due to the Ukraine and Russian crisis, the war. So Russian Putin has declared the war. So this you can see, this is the green line. So this is the actually the average volume bar, which is the more than the previous average bar. Okay. So if you see that the price is just going up and the volume is red, then it is indicating that the stock will reverse soon. Okay. So here we have got very good green and big volume. So tomorrow maybe we will see another fall in the stock market. Next is Bollinger Band. So Bollinger Band were created by John Bollinger. Bands are based on the moving average of a particular closing price. They are two standard deviations above and below the moving averages. A buy signal is given when the stock price closes below the lower band, and a sell signal is given when the stock price closes above the upper band. So in my experience, the buy signals are far more reliable than the sell signal. Why? Because you will get the stocks which is falling very soon, and it will the price will be close below the lower band, so you can go for the buy. So resistance and support. So resistance and support is means the price levels which at which movement should stop and reverse direction, act as a floor and selling. Different states, major and minor. Support, the price level below the current market prices at which buying interest should be able to overcome selling pressure and thus keep the price from going any lower. This is the resistance. So the price level above the current market price at which selling pressure should be strong enough to overcome buying pressure and thus keep the price from going and higher. So you can see there the stock, the movement has started from here. Here you can see the top, the high is here, again it went down, again you can see the higher here. So this, though both prices are almost same of this candle and this candle. So this is the bar chart. So this is the resistance. Why is the resistance facing the resistance and coming down? It is just going up to the same level and it is coming down. So you can see here here you can see the low, and again here you can see this low. So these lows are the actual the support of that particular stock. The whenever the stock has started to fall, it come at this level and again it is trying to go up. So that means it may take support from this line, and again in upcoming days, in upcoming trading sessions, it will go up. This is how it's work, support and resistance. H and S, that means the head and shoulders. So these are the market patterns actually. So resembles an M in which the stock rises, so rises to peak and then declines, then rises above the former peak and again declines, and then rises again but not the second peak and again declines. So if you didn't understand, don't worry, I will explain on the chart. So the first and the third peaks are shoulder and the second peak forms the head. So very bearish indicator. So you can see here. So the head should be higher than left hand shoulder and right hand shoulder. So this is the middle peak, second peak, or this is the first peak, this is the third peak. So which we have discussed in the last slide, right? Former peak and the last peak, right? So this is the first shoulder, which high is below the head, and the third shoulder, that means second shoulder, this is the third peak, which high is lower than the head. And once this trend line is broken, the stock has fallen down. So this is how these chart patterns are worked. So we have a mini chart patterns. Okay, so I have just given you the first introduction about the first HNS, high and shoulder. Most useful bearish indicator it is. So next is a double bottom. Occurs when a stock prices drops to a similar price level twice within a few weeks or months. The double bottom pattern resembles a W when the price passes the highest point in the handle. In a perfect double bottom, the second decline should normally go slightly lower than the first decline to create a shakeout of jittery investors. The middle point of the middle W should not go into the new high, and this is a very bullish indicator which is useful in the technical analysis. Okay, so next, so you can see the stock has started falling from here. It took the support from here, again it went up, again it fallen down till the last support. So this is the support line, these both are the support line and both prices are almost the same. So this both lows can be considered as a double bottom. Okay, this is the most useful bullish indicator. Conclusion: technical analysis is a particular approach to investing that will appeal to some investors and not to others. Whereas most investors concentrate on the fundamentals of a company, turnover, profit, growth, etc., technical analysis are concerned with the share price itself. So they believe that prices are driven by the psychology of investors and rather than fundamentals. By understanding investor psychology, they can predict which way price will move. So thank you. So we have finished the unit 3 technical analysis, Dow theory, and the breadth of the stock analysis. Thank you. Best wishes. Still, if you want to learn technical analysis, if you have any query about technical analysis topic or unit, you can ping me personally. Thank you. Best wishes.